It's no news that Tesla's stock price is dropping, and has been doing it at a significant rate. For most Tesla investors, holding on to their shares is gradually becoming more and more difficult as the stock price continues to plunge by the day. However, although there are concerns about Tesla's stock price, as well as the demands for its cars, CFRA Research Senior Equity Analyst Garrett thinks some of these recent concerns are overblown. According to him, there's a lot to look forward to in 2023, and so rather than being fearful, this could be a buying opportunity for Tesla investors and bulls. Hey everyone, welcome back to Tesla Tomorrow. Garrett is pretty bullish when it comes to Tesla. The car company is his top industry pick, and he sees it as a top performing stock in the industry in 2023. While speaking in a recent interview, the Tesla bull noted that although there are concerns surrounding the steep declines in Tesla's stock price, as seen over the last few months, taking a step back, the car company has actually performed incredibly well, especially in terms of its car sales. Garrett also cited some factors which could help the stock in the coming months. What are they? Keep watching to find out, but before we get into the video, don't forget to like and subscribe and turn on that notification bell to keep up to date on everything going on with Tesla. Tesla recently published its fourth quarter vehicle production and delivery report for the year 2022, and there have been quite some reactions to this. Deliveries are the closest approximation of sales disclosed by Tesla. These numbers represented a record for the car company and a growth of 40% in deliveries year over year. According to Tesla, total deliveries for the fourth quarter of last year were at 405,278 cars, with a total of 439,701 EVs produced during that period. This left total annual deliveries for the year at 1.31 million, and total annual production at 1.37 million. Tesla's last Q4 would make it 3 straight quarters where the automaker is exceeding delivery, as the car company's delivery numbers are once again falling short of analysis expectations. According to a consensus of analysis estimates compiled by FactSet, Wall Street was expecting Tesla to report deliveries around 402,000 for the final quarter of the year. The estimates, which were updated in December and included in the FactSet consensus, ranged from 409 to 433,000. Another consensus published by electric vehicle industry researcher Troy Teslike stated that 24 sell-side analysis expected Tesla deliveries to reach about 417,957 on average for the quarter, and about 1.33 million deliveries for the full year. While there have been comments about the Q4 delivery numbers, Garrett believes that it is an overreaction, since this was a record delivery level far exceeding some of the numbers that had been previously recorded. According to Nelson, although the number wasn't quite as high as the consensus, which is why the stock is being hit, it was still up 31% year over year. He further described this as a type of growth that is above and beyond what anyone else in the industry actually thinks. Garrett had cited several factors that could boost Tesla's performance in the new year, and according to him, there are potential catalysts that could drive up the price of the stock in the future, one of those being the anticipated share buyback. Elon Musk has said during the company's Q3 earnings call that Tesla is highly likely to do a meaningful buyback this year, between $5 and $10 billion, although he had also said that this will be up to the Tesla board to decide. By doing a share buyback, Tesla could reduce the number of outstanding shares available, which would in turn increase the ownership stake of current stockholders. And that's because reduced supply of shares also cause a price increase. Investment analyst Alexander Merz had previously said that the buyback would allow Tesla to benefit from a currently undervalued stock price, and if done correctly, Tesla could avoid the 1% tax on buybacks in 2023. Merz, alongside other investors, have also argued that a stock buyback would also show confidence in Tesla's future results and could also return wealth to shareholders. The Tesla fan, who is in the past a shareholder, stated that he had recently begun to short the stock and has earned back roughly half of his losses. According to him, he believes in Tesla's long-term growth. However, he needs to see some action from the board before going long on the stock again. Likewise, Garrett believes that the buyback will benefit Tesla, and he also thinks that it could be coming sooner than expected. And hopefully with Tesla stock in a better place, this could restore the hope of EV buyers in the car company, causing demand to skyrocket to a whole new level. Also, with the tax credit in place for some of Tesla's car models, demand may go even higher in the coming months. Nelson noted that Tesla is continuing to ramp up production at their new factories in Austin and Berlin, and will also likely continue to meet demands for its EVs. Tesla stated that its production started at 2 new factories last year, Austin, Texas, and Brandenburg, Germany, and also ramped up production in Fremont, California, and in Shanghai, although it didn't disclose production and delivery numbers by region in its recent deliveries reports. One other potential catalyst for Tesla stock, as stated by Garrett Nelson, is the Tesla Cybertruck. The Cybertruck saga is finally coming to an end, after years of delays. And luckily, without major redesigns, the electric truck is getting ready for production. This fact alone seems to have spurred more fresh orders, and people who ordered it years ago are not giving up their turns. The Cybertruck recently counted over 1.5 million orders. There is no other vehicle in the history of the automotive industry that has gathered so much interest, with people willing to put down their money without actually knowing when they will get their car. Hopefully, if all does go well, Tesla's plans for the Cybertruck will actually have customers getting the chance to finally drive their own Cybertruck, especially for those who ordered early on. 1.5 million orders mean that Tesla has made $1.5 billion even before selling a single truck. Although all these orders are non-binding and fully refundable, the majority of people still want to go through their orders. However, with 1.5 million orders in the queue, the usual production ramp-up issues and related delays could see Tesla taking 10 years to fulfill this backlog. Also, Musk has admitted that the original $40,000 starting price for the vehicle is no longer possible, and may not be able to honor this when it eventually translates into sales. According to Garrett Nelson, the best thing Musk can do is to be focused more on Tesla, and in getting the Cybertruck to market as fast as possible. He reiterated that the forthcoming model has the highest backlog of any forthcoming EV on the market by a wide margin, and so the sooner Tesla brings that to market, the better. He believes that when people actually see the vehicle on the road, it'll generate a whole lot more demand and interest. Garrett Nelson also noted that alongside the release of Cybertruck, Tesla needs a product that will excite people again. According to him, Tesla's at a point where they haven't got a new vehicle model, aside from the recent Semi, which is in its own a commercial truck class. And so as soon as the automaker starts to build its factory production line at the Austin factory and start producing the Tesla Cybertruck, the better. According to Nelson, Tesla's balance sheet is very strong, and although the stock is heavily affected by several factors like Musk's Twitter deal, it could still record exponential growth in the future. The Tesla bull admitted that the deal has been a huge distraction and has caused some damage to the Tesla brand in the process. He does, however, think that Musk is doing his best to resolve the situation, which will see the overhang being lifted at some point in the coming weeks and months. He said, "Clearly, it's been a huge overhang on the stock ever since the acquisition was finalized, but we think it's really on a better path going forward. We've been saying that he really needs to take a step back, and the sooner he finds a CEO to replace him at Twitter and assumes more of a chairman role there, the better." According to Garrett Nelson, while Tesla stock has taken a hit lately for a variety of reasons, including decreasing investor confidence in Elon Musk to run the company effectively, the automaker can still perform better in the future. The car company reached a whole new level last year after the S&P Global Ratings announced that it had raised its long-term credit rating on Tesla from BB+ to BBB, which is the automaker's first investment-grade rating. According to the ratings company, Tesla surpassed expectations on many metrics, and he believes that the automaker will continue to maintain low debt while delivering strong profits amid a weakening economy and an increasingly competitive environment for EVs. But what's your take on Garrett Nelson's comments on Tesla's future performance? Let us know down below, and if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.